Buckle up, Costa Rica. Your colon is flexing muscles like never before against the US dollar. Picture this. In a stunning turn of events, the US dollar has plummeted to its lowest point in nearly 2 decades against Costa Rica's currency, the colon, hitting a record low of 493.47 Costa Rican colons in the Monex foreign exchange market. This eye-opening dip, as tracked by the Central Bank of Costa Rica, check out the official data at https://ge.bccr.fidc/indicadores económicos/quadros/FRM vercat quadrote ASPX idioma =1 cod quadro =770. Marks the end of a 6-day losing streak for the greenback. But here's where it gets interesting. This isn't just a blip. It's part of a bigger economic story unfolding in Central America. To put this in simple terms for beginners, the Monex market is like the bustling hub where Costa Ricans and visitors swap currencies, much like a big marketplace for money. Traders there watch the dollar tumble below 494 Costa Rican colons for the first time since early 2006, a moment that feels like stepping into a time machine of economic shifts. According to the bank's figures, this average weighted exchange rate drop comes from a surplus of dollars flooding in from exporters and money sent home by workers abroad, remittances, while there's a steady pull for colones to keep the local economy humming. Building on recent trends, just a few days ago on Tuesday, the dollar wrapped up at 495.97 Costa Rican colons, showing relentless downward force. A week before that, rates were lingering around 499 Costa Rican colons, but the colon has been powering ahead, shattering the 500 Costa Rican colons barrier repeatedly since mid-November. Experts chalk this up to seasonal vibes. Think booming tourism visits and bumper crops from farms that are giving the local currency a serious edge. This pattern mirrors updates from earlier this month when the dollar first dipped below 500 Costa Rican colons, sparking worries among companies that rely on imported goods. On the flip side, sellers of exports like coffee, for those who love the authentic Costa Rican brew, try the chorrita style at https://ticketimes.net/2023//11//experience-authentic-coffee-with-the chorrita, and bananas are grinning from ear to ear, as their dollar earnings now stretch further in colon terms. But tourism pros are sounding the alarm. A stronger colon means pricier trips for foreign visitors, which could dampen bookings during peak holiday times. Financial trackers back up this low point, with one service noting a bottom of 493.55 Costa Rican colons on November 27th. Over the past week, rates swung wildly from a peak of 499.95 Costa Rican colons down to this new low, painting a vivid picture of the colon's ascent. The central bank is keeping a watchful eye but hasn't hinted at jumping in yet. In similar sharp drops before, they've steadied the ship by buying dollars to curb wild swings. Right now, though, the market seems to be self-correcting like a well-oiled machine. Business insiders urge a wait-and-see approach. Importers are bracing for pricier colon costs on dollar-priced items, which might trickle down to higher prices for consumers. Imagine your electronics or car bills creeping up. Retail giants in those sectors could tweak prices if this keeps going. As Costa Rica rides these waves, the exchange rate's future is intertwined with global players like US interest rate changes and domestic growth spurts. With the end of the year looming, forecasters predict more pressure on the dollar, but a potential bounce back if export volumes slow down. Locals and tourists are glued to these daily shifts. Banks recently offered buy rates near 495 Costa Rican colons and sell rates around 502 Costa Rican colons, with slight tweaks per branch. For anyone swapping cash, the golden rule is to shop around rates constantly as things keep fluctuating. This twist fits into the ongoing tale of colon strength, as seen in past reports, like https://Costa-Rica-11//114/115//Costa-Rica-colon-exchange-rate-10%-sign C2%-sign-A-2499-raising-concerns, where rates fell from over 510 Costa Rican colons early this year to today's marks. It points to a deeper trend of colon empowerment, fueled by robust foreign investments and inflation that's kept in check. And this is the part most people miss. Is this colon surge a double-edged sword? On one hand, it's great for exporters and those sending money home. But for importers and the tourism industry, it feels like a hidden tax. And here's where it gets controversial. Some argue this strengthens Costa Rica's economy by making local products cheaper abroad, boosting competitiveness. Others worry it could lead to inflation or deter foreign investment. Do you side with the exporters celebrating or the importers bracing for impact? Is a stronger colon ultimately good for Costa Rica's global standing, or does it risk isolating the country? Drop your take in the comments. Let's debate.